Hey everybody, it is Mike Weller with the Weller Group of Keller Williams Realty. Just wanted to reach out really quick, have a little bit of a conversation with you. I'm getting a lot of questions and I'm hearing a lot of talk and a lot of chatter about mortgage forbearance with everything going on with coronavirus and COVID-19. There are some mortgage forbearance programs out there, and I wanted to bring in my colleague and friend Momi Pointer from Arbor Financial. She is one of the top lenders in Orange County, and I wanted to bring her in to chat a little bit about mortgage forbearance. So thanks for being here today, Momi.
Thanks, Mike. Good morning, everybody.
So
Yes, I've been getting a lot of questions about forbearance too. And one of the things that I'm letting people know is that forbearance does not equal forgiveness.
Right.
So forbearance is under the CARES Act. And for those of you who aren't familiar with the CARES Act, it stands for Coronavirus Aid, Relief, and Economic Security Act. And one of the things that I want to mention is that homeowners that are not impacted should continue to make their mortgage payments on time to maintain your credit bureau scores. Forbearance is basically the primary option that like Fannie Mae, Freddie Mac, VA, USDA, and FHA have made available to the servicers to provide to homeowners. And it's a temporary suspension. So forbearance is a temporary suspension of the homeowner's mortgage payment intended to allow the homeowner time to manage their personal finances or their financial situation. In this program, the forbearance will be for minimum, right now it's for a minimum of 3 months. I mean, we'll see what happens when we come out the other end of the pandemic. But borrowers should definitely attempt to keep current on their taxes, their homeowner's insurance, so that those don't become past due. They're still trying to figure out what if you're in an impound account, meaning that your property taxes and your homeowner's insurance are part of your mortgage payment and you're not paying for 3 or 4 months or 2 or 3 months. The government-sponsored entities like FHA, Fannie Mae, Freddie Mac, they're trying to figure out how they're going to handle that. Because if you're late in your mortgage payment and they're impounded, you're going to be late on property taxes and homeowner's insurance as well, or there won't be enough in the account to pay it, right?
Yeah.
The forbearance program waives all the late charges, and the program will suppress any derogatory credit bureau reporting. I have no idea what that looks like, but that's what we've been told, that it's going to suppress any of the derogatory credit bureau reporting. One thing I want to make clear to people is, again, it doesn't equal forgiveness. So at the end of the forbearance, all payments that were suspended during the forbearance will be due. So think about it from this perspective. Somebody here in Orange County or in the San Francisco Bay Area, maybe they have a $4,000 mortgage, all in, principal, interest, taxes, and insurance. They suspend their payments for 2 or 3 months. 3 months would be $12,000. That $12,000 is due and payable at the end of the forbearance period. So if they weren't able to make a $4,000 payment, how are they going to be able to make a $12,000 payment? So we don't really know what that's going to look like at the end of 3 months, but I think that lenders and servicers are going to work with the homeowners to maybe either modify that $12,000 or whatever amount it is, and maybe incorporate it into the principal balance. Again, we haven't gotten that far, but it's good news that, we're going to have payments suspended for a maximum of 3 months.
Yeah.
Maybe, go ahead.
No, I was going to say, in my experience with lenders, I used to do quite a bit of short sales, back in these short sale days in the Great Recession and even years beyond the Great Recession. And some lenders and some loan servicers you can trust to follow the guidelines of these types of government programs, and some lenders and some servicers really push the limits of it, or just they just violate a lot of the guidelines that they're supposed to follow. So I've been telling people, really, I would look at that as that's your last resort. If you really can't afford to make your mortgage payment, absolutely take advantage of a forbearance program that your lender has. But if you can continue to afford and pay your mortgage, I would do that, because it's not forgiveness. This is not free money. And you very likely could be setting up a situation where You're going to owe a big chunk of money at some point in the future that may or may not make sense to pay, or you may or may not be able to afford. And I don't necessarily know what the credit reporting is going to look like. I know what the guidelines say, but who knows what that ultimately means, and who knows what that means. You want to talk about what that could mean for somebody on, if they go to refinance in the future or go for a new loan to purchase a new property?
Yeah, well, that's kind of what we've been talking about and trying to get more clarification on. So again, if somebody has a big lump sum that they owe at the end of 3 months and rates are still really low, which I think they will remain low, how is that person going to be able to qualify to do a refinance? And what does that look like on the credit, on the credit reporting portion or in the mortgage portion of their, of their entire loan? Again, we haven't really gotten that far, but it is definitely being talked about. And I know that a lot of the associations are going to the CFPB and even the government-sponsored entities to talk about how are we going to get through this? Because again, if somebody can't make a $4,000 payment, how are they going to make a $12,000 payment and catch up? One of the things that I wanted to mention is, we're talking about forbearance doesn't equal forgiveness. In order to qualify for the forbearance, you have to reach out to your lender or your servicer. You can't just stop making the payments because you can't afford it. You have to be able to, I know, but some people do, right? You have to be able to show to your lender or your servicer that you can't afford it, you do have a hardship, and that you have to make the request to do the forbearance. So I want people to understand that I know this is hard times economically for a lot of people. What do we have for unemployment last week? 6 million filed, 6.6 million. Yeah. So if you're one of those people, please reach out to your servicer. You are interested in applying for the forbearance, but don't just stop making your payment, because that could very well affect your credit report or your FICO score.
Yeah. No, I mean, a lot of great points there. If anybody has any specific questions about their own situation and in forbearance, I'm certainly happy to speak with you. But if you want to talk to a really good lender and get a lender's perspective, Momi, I'm thinking that you'd be happy to speak with somebody as well.
Absolutely. Right? Yeah, okay. Absolutely.
So give Momi a call here. Our number is at the bottom of the screen. Just like we both talk about, it's really more of a last resort. So really try to continue to make your payment if you can. Don't use this as it's not a free ride. It definitely is not a free ride by any means. So anyway, well, thanks for joining me today, Momi, to talk about this. Everybody appreciates your professional feedback and expertise in this area. So stay safe at home, and we'll talk to you sometime soon.
Excellent. Thanks for having me, Mike. I appreciate it.
Absolutely. Thanks so much, Momi. Take care, everybody.
Bye.